So markets are kind of throwing this mixed signal. We're hitting all-time highs, Larry, with oil at over $100 a barrel, which no one had that on their bingo card. And everyone thought that if oil stayed at $100+ a barrel, you would see markets start to sell off. As a matter of fact, the President of the United States yesterday, Donald Trump, actually in his Oval Office said he's surprised at how well the markets are doing. He expected it to be down 20%. So I want to ask this question to the listening audience, and we'll go deeper into this weekend on our show. What would happen to your retirement if the market truly did go down and stay down 20% for months on end? Many people have maybe never warplayed that out with their advisor. I think that's a wise decision, especially right now where we are, understanding how fragile the underlying foundation of this market is. We've really been bid higher by AI stocks. These technology stocks have pulled us higher and kept us higher in the overall market. The news lines of higher markets really do not truly give us a picture of what the actual market or the actual economy is like. Because I think the economy is a little weaker than that. I don't think that we're at all-time highs in the economy. Prices are higher than we would hope for them to be. Oil stays high. If it stays high, it will creep into the stock market. There's no doubt. So what we're trying to tell our current clients and our listening audience is to make sure that you're evaluating where you are in your retirement journey. If you're under 5 years away from retirement, it makes a lot of sense for you to understand how this market will affect your retirement if you see a downward pressure stay in effect. So what I'm getting at is AI has pulled us up out of a dip that we saw just a few weeks ago. I mean, we're up almost 8% in some indexes in just a matter of weeks. Some indexes are up 10 or 12%. This is where we understand that the market has been sold off recently and then bought back almost immediately. What happens, Larry, if it sells off and stays down? This is where you have to reevaluate your own retirement plan. And we at RDS Wealth believe that there's a 60-40 traditional balanced portfolio that most retirement advisors are subscribing to. We think that might be an illogical way to position your portfolio. There are better ways to protect against downside market movement, especially if you need income. So what I'm getting at is reevaluate your portfolio, make sure that you're using the best possible solutions for this. It doesn't have to just be traditional stocks and bonds. Mutual funds may not be the answer for you. Going outside of the box, especially as you enter into retirement, makes a lot of sense, and using different tools that you never used to get to this point in your life. It takes those to survive in retirement income phase.
Saturday morning at 9 o'clock or just after the news at 9, you'll be talking about this.
That's exactly right. I mean, this is the time. The market is at all-time highs. Now is the time to evaluate whether or not you can withstand risk in your portfolio, because everybody wants to discuss selling things when the market's low, and that's the complete wrong time to sell things. Now is the time to reposition a portfolio if you need that repositioning in your own plan. Stick with your own plan, but make sure you're evaluating that plan on a regular basis. That's what we do at RDS Wealth, and that's what we talk about on our radio show.
Yes, sir. Yes, sir. Well, just to be clear, oil is $122 a barrel.
Silly, isn't it? Yeah. And so there's the Brent oil, and then there's the W. Now, the funny thing is, we feel like gas prices are high right here. In Europe, Larry, they're in a crisis. We're talking about potential 4 to 6 weeks from now, they may not have oil to sell, period. In Asia, again, may not have oil to sell. This Strait of Hormuz things has to clear up soon, or the whole world will feel it. And I will tell you this, we dog the president a lot for maybe not higher prices and the whole 9 yards. Where we are right now in our positioning with American dominance in oil production is the only reason we are surviving and not suffering like Europe is. Over the last couple of years, we've become an energy exporter, a net exporter of energy. And thankfully for that, still we feel gas prices high because global markets drive the price of gas, the price of oil.
10-4.
But what we have here in our domestic energy crisis is nothing like what Asia and Europe is feeling. And so this is something that has to square away soon, or your retirement account may be under pressure.
We'll continue this conversation next time you're on. Brother, have a great day today.
Yes, sir.